Hi guys, John here, Mr. Forex Fire. It is currently the 3rd of February and it's a little after 8:30. So I'm going to do a little video today on something that I've learned from another good trader just down the road from me. And what I'm going to do, I'm just going to put some levels on some lines, get the teeth in. Just going to put some levels onto the chart. And what I would sort of advise you to do is get yourself a notepad and pen and just follow along with this for now, okay? Just to get some things into practice with this, okay? Because it's something you could do and it's something that you could set up ready for the weekend, okay? And I'll just talk you through the process. We'll take it slowly and hopefully hopefully you can learn a little something from this technique as well, just as much as what I have, okay? So just bear with me. We will head over to the big screen. And I'm going to use the old faithful of mine, which is the Euro USD, okay? So you'll notice on the top, I've got it on a monthly. So what I want to do, I just want to go on and get horizontal line, okay? Or I should say a vertical line. And I'm going to go back at least 2 years, okay? So we're going to go back to, I would say, around about November, okay? And I'm going to place this from here. I'm going to zoom in. Okay. Doesn't look much to look at the moment, but trust me, there's a method in the madness with this. So we're going to go to a line chart, okay? And we're going to highlight the significant turning points, okay? So then we go up to the horizontal line. We've got one there, and we're going to make these in red, okay? And we want them as a line, okay? And there's got to be at least a couple of significant touches, okay? So, in fact, anything that's short like a shark fin, we can choose, okay? And there's method in the madness with this. If you just follow along with me, we've got one there, certainly one there, certainly one there. And certainly one there, okay? And we could argue we've got a little bit of a meander here. And that's just a kink in the road, I would say. Right, so then we go down to a weekly. Okay, let's get rid of that one. And now the weekly, I'm going to make into an orange, okay? And this will look messy when you first do it. But once you drill it down to what I'm going to show you, you will find what these do, to be fair. So we've got one certainly there. One here. Another one about there. There. See how they're coming in and they're touching. We've got all the way along, bang, 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 bang. One here. One here. And again, this does look busy, but trust me, once we go down to, let's see, that's the weekly. You want to go down to daily. Now, when you go down to the daily, it's going to get far too busy. So what we're going to do, we're going to bring this line along. until the last few months. Now you'll see all these areas here, they're very important touches, but they'll coincide with what's along here, okay? So what we'll do is scroll into this area, and we're going to be looking at the last few months, okay? So what we'll do from the December. And what we're going to be doing is making these ones yellow, okay? These ones will be yellow. And again, we're just bringing them to the turning in the road, as so. Very significant line there. One here. Could argue there's one there. One here. One here. And one here. Okay. Could go down to that one there as well. Right, so as we've moved down, we would then go down to the 1 hour. And then when we go down to the 1 hour, okay, we're not going to be putting the support and thingy levels in here because it'll be too many. All you've got is the significant ones there, okay? Now, if you change this back to the candles, you can see how we're coming down and we're respecting areas, okay? And it respects it really well. And these levels are fantastic, okay? So from there, we're going to go back up to the daily, okay? Scroll out. And we're looking at the previous day candle, okay? Now, we're going to mark these ones in a blue, okay? So you want to do top of the candle. You want to do bottom of the candle, okay? You then want to do the close of the candle, but the close of the candle you're going to make into a dotted line, a dashed line, sorry, okay? And then you're going to do the same at the open of the candle, okay? And then you're going to get your fibs and go from the bottom of the candle wick up to the top, okay? And then you're going to mark 50%. This is the 0.5, you can see here, the 0.5. And you're going to make this purple, and you're going to make it a dotted line, okay? Maybe make that a little bit thicker. Right, so we scroll back out, and it looks a hot mess, okay? What we're generally looking at is obviously this is a significant area within price, and I'm just going to go to the top here, okay? So if you can imagine a candle, okay? If you can imagine a candle, and then you've got your next day candle here, okay? Generally, when you get the movement of candles in any sort of price, when you get the movement of candle and it's oscillating on the next candle down, okay, it's going to up and down, especially on a daily, there's a price range, and that price range works really, really well, to be fair. If it's going to stay within range, it's going to fluctuate, it's going to break one or two of these, but it'll generally come back and revisit the center area, okay? So if we go back down without trying to move we'll lock that, click the lock, it just locks everything on the chart. Okay, you'll see on the daily, you see how the candles are steering. There's a daily range for 50%. There's a daily, the range 50%. There's a daily, there's the range, it's around about 50%. They'll always stay around about 50% of each other. And this is where the levels come in, okay? So what I need to do is get rid of that there. Now, when you go down to a 15-minute, you can see this is the daily, okay? I'll just minimize this. You've got the daily, okay? Daily P high. And what we're going to do, we'll put that to the right, okay? This here is the daily P low, okay? This here is the previous daily 50%. To the right. So you can see here, this zone here is the high, the low, and the daily 50%. Okay. Now, what we're generally waiting for is a break of a structure of a line, okay, and then a retest, and then it comes back in. So you can see on here, we've come up, it's broke, it's come back to more or less retest, and then it's shut off. But again, what we can generally do is put some fibs on, and we're going to be taking it from the low to the high. You just bear with me, guys. I've just got to sort something out with someone at the door. I do apologize. I've got that bit wrong on here. What we've got on the dotted lines, just get rid of that. Dotted lines, that is the 50%, to be fair. Get rid of that. The blue line is the previous daily floor. Knock that over to the right. The strong blue line on the top is the previous daily high. Okay. I'm just going to mark some fibs up on this at the minute. So I just need to look at something. So I would generally put a box in and around that area there. And there is some fib levels on this. I'll get the fib levels for us. But you're generally going to be marking a good 10 to 15 pips either side. And then you want to put them on the low. Okay, so this is our range. And again, it looks a hot mess at the moment. Just get rid of that. Go down to the 15-minute. And as you can see, we've got all the tracks on here. We've got the weeklies. We've got, this is the monthly. Okay, this was a monthly high. So these are very strong areas. And again, look at this. We're down on the 15-minute chart. Look, this is the monthly. When you look at it, it's come back, it's come up, it's retest, bang, magnet, magnet, magnet. And it's the same with these weeklies. Look, on the weeklies, even if you go down to the 15 minutes, the weekly line, look, bang, bang, bang. It's attracted, it's just attracted, it's attracted, it's attracted. It's broke the weekly, it's just gone down the monthly, it's gone back to the weekly, it's rejected right on the money of the level of the weekly. And then it's gone, as it's broke, it's gone back up to the weekly area, okay? And again, this here, the daily low, this is the candle from the daily low. This is where the daily low started. And it's bouncing between the daily low and the open of it. So it's going between the two and it's staying fixed within the zone. Okay. And then as it's come out and it's broke through the daily, it's come back down to retest, and then it's gone to the center. Okay. It's come up, it's broke, and it's retested the close of the candle, and it's gone up to a daily high as it's produced its daily high. But then as we're coming into the new day, so this area here, because that was a daily high, as we're coming into this area here, okay, we're now forming new candle for the daily. Okay, so take your attention as we come down, we broke, retest, it's hovered, it's come down to the center, it's come back to the previous daily close of the candle. Okay, and then it's come up, it's retested that the daily, I think it's the weekly, I think it is, this will be the weekly. Okay, it's come down, it's retested the close, and then it's gone back up and went back to the weekly. It's come back down to the close of the previous day candle, and then it's come to the center of the previous day candle. It's come back up to the close of the candle, and you just see how these levels they're continuously checked like a magnet. Okay, and again, you could drill it down to a 5 minute if you wanted, and you can just see how these levels are just massively respected. Okay, I mean, this is a bit more of an advanced sort of, it's not smart, it's definitely not smart money, it's levels, it's like a retail sort of traded way, but it's a very, very highly effective advanced technique where you're not just going straight down to your 5 minute chart. You're not just going straight down to a 5 minute chart and just saying, this is my support line. You're building these areas, or these magnets, as we would call them, from a higher aspect. So you're in your monthly, your weekly, your daily, you're building your levels from that aspect on your turning points from a line chart. And then this is showing you in the future where these lines are still going to be respected. And again, you can just see here on this open and close of a previous day, the daily here, okay, the high, this is the close, that will be the close of the daily. That there is the open of the daily. Okay, and I'm just trying to open your eyes a bit on how this thing works. Okay, so I'm just gonna apologize there. So you can see on here, close of the daily, open of the daily, 50% of the daily, but the daily high wicked all the way up here. So again, visually, if I show you, that's better, look, daily high, right here, close of the daily, because then we went into the open of the next of today's candle. Okay, close of the daily, 50% of the daily, and we've got the open of the daily and where this had wicked as the daily. Okay, that's wicked as the daily. And when you bring this down, it does look a hot mess. When you bring this down even to a 5 minute, okay, look at all these candles here, bring it down to a 5 minute. We've not drawn anything on the 5 minutes. Okay, just like I say, keep your mind open. And when you come down to your 5 minute chart and you need to scalp to these areas, you can see when you get a clear break of structure, okay, you've got a possibility of working yourself into a good 10 or 13 pips on there. And you really only need, when you're doing these funded challenges or funded accounts, you really only need to be able to just grab yourself 5 or 10 pips. And if it was going to reverse, you just need to understand that the reversal is just going to take it to one of these stronghold magnet areas, to be fair. Okay. Again, when we look at the blue areas from the 50%, the close of the daily, the open of the daily low, the daily high, that's on the previous one. Okay. And where you've got this wicked to, okay, let's just That's on there. Where this is wicked to, so that would have been yesterday's candle maneuver altogether. As we're coming into the new day, you can just see how these areas, respect, center, and again, this here is a stronghold. Okay, so stop the share a minute. I'm going to sort of have a little more in-depth look at this and see ways to trade it and things like that, but it's a very good technique of marking up where your areas of interest are, okay, your extra areas of interest are, and being able to just go on the chart, identify where you are structure-wise, and just say, yeah, we've got, just share the screen again. We go up to the 4 hour, okay, we can have a look and just see, yes, we're in an uptrend at the moment. Is this just a pullback? This is just a pullback from possibly a pullback for, let's have a look, from a weekly aspect, and it is. So there's your drawdown, your downtrend, sorry, and then that candle there has just been, it's a weekly massive pullback. So again, there's been nothing but buying power, okay? So it's come back and it's touching within, again, on a weekly aspect, you've got your levels inside of here, your candles, your blue levels. Your blue levels here is your daily, okay? So we could be 50% of this pullback. Let's just have a look. You see in here, we're more or less touching on a 50% of the pullback there. So we might be on a continuation of a trend down, okay? So if we go back down to a 5 minute, let's just take a look. Short. Let's just see if we get a touch on here, we'll take that to the close of the daily, okay, and then we can say, well, right, we can head this down to maybe here, okay. Yes, it's only a risk of a 1 to a 1.1, but again, if you sort of manage your risk, okay, you can sort of filter in extra trades, if that makes sense. So you're not going all in. You're not going all in as such with, let's say you're using half a lot size, okay? So you'll have levels within this area where if you've got a 0.5 lot, which is what you would generally use on the entry, you could break this down into 1, 2, 3, 4. Just bear with me, so then you could see, right, let's get this on here. So that's going to equals to, on a lot size on each position, you're going to see, right, I'm going to risk a 0.12. I think it's 1.25 to be fair. So each time a level comes up, as this moves down, each time, if it was to come up and hit each of those levels and then come down, you're filtering in a maneuver of a 0.12. So you could set your trades up because you know these areas are a stronghold, okay? Again, it's going to be pushing through. If it moves on the upside, it's got to push through not just the 50% of the daily, it's got the close of the previous day candle. We've looked at the higher time frame on the weekly. It's pushing up to a 50% of the daily, okay? From on this daily candle, as we say, and we could just be coming to reach into those areas to then continue on that downtrend, which is what the weekly was showing us. Okay, so again, at the moment, it's currently It's entered on 1, it's entered on 2. So this is, it equals entered on two areas. And what we'll do is I'll leave this trade as it is, and we'll just see how it plays out. But again, it's risk management. It's not just, yes, it's risk to reward, and you're going for the whole 0.5 lots in the particular area. You're managing the trade as it's coming into other areas of interest. Because overall, yes, you may be risking a 0.5 lot size overall, okay? But as this comes up and it goes into those little bits of drawdown, when you're getting your pull back or your pull down from these areas, okay, you're going to manage your trades as it's coming back down as well, okay? So again, you only need to get 5 to 10 pips, okay? Once you get those 5 to 10 pips, whether it comes from this entry, or if it's coming to the drawdown, it's hit this entry and it's come down, you've got a more, what's the word, the money managed trade entry, if that makes sense, with regards to getting your wins. So you're not just relying on this one area. You're not just relying on that one area to produce the whole of the 5 or 10 pips. You could go up to here. It's again, we've got the 2 touches, okay? You've got in here, you've got the entry here, and then you've got the entry wicked here. You're not just relying on the one entry, okay? So as we get rid of that, at the moment, I see a 5 or 10 pips. We've come here. There's 2 of the pips there already, okay? If this was to push on, not only have you got 2 pips there, even if I come back out to test that, there's 4 pips, okay? But even on the 4 pips, you've got an entry here. There's an extra 2 pips. There's 6 pips straight away. So again, you're managing your trade from the aspect of areas of importance within the areas of not the supply and demand, but the areas of sort of retail methods, where we've marked up all of these colored lines as strong magnet areas. Because back in the day with retail methods, let me just stop this. Back in the day with retail methods, I don't know about you, but obviously the platforms I was with, you were always told that do your support and resistance on the time frame and the charts that you were trading from. But this method, you're looking at your monthly, your daily, your weekly, okay, on the line chart, looking at your turning points on the line chart, highlight them up, okay, and then you bring your couple of year into a couple of months, and then you're going on to the hour chart, and then you're starting to look at where the candles are, and you just sort of refine it from there. Again, I'm just going to share the screen. We'll see where we are with our trade at the minute. It's gone back to do a retest on this area. I'll pause the video and we'll come back and we'll see how this plays out, and I will chat to you in a bit. Hopefully it makes a little bit of sense, because again, we talk heavily on risk to reward, getting in on a trade, yes, on a nice 1 to 5 or 1 to 6, but this is the other side of the fence where you're still assessing the trade. Yes, this whole move's only a 1 to 1.44, but you're managing your trade from an aspect of when it goes into the drawdown, you've got levels inside of your drawdown area, which you're allowing yourself to play with to sort of spring back from. And you're using, like I say, as a recap, if we were going to be using a 0.5 lot size, we are breaking each quarter area, let's say, into a 0.12, okay? So as it hits each of those quarter areas, it's bringing in what you were willing to risk overall as an overall sort of piece of the pie into a segmented area. And again, I do believe this is it's a great way to trade. It's a fantastic way to trade. But we'll leave it there. We'll come back, we'll pause the video and see what happens in a second. Okay, we'll see what happens in a second. Hi guys, so sorry about that. We're back again. I've just delved a little bit deeper into this. We'll go on at 2 minutes, okay? So just using other techniques we've got from the wick here up to the wick here. We've got imbalance, okay? Now, yes, we've got this whole maneuver at 1 to 1.44, okay? I'm not interested in that. All I'm interested in is that is the whole maneuver. And again, you only need to take 5 to 10 pips, okay? So we've got an entry here in the drawdown where we broke down the trade. And if that was to go to there, you've got 5 pips there, okay? And then if you were to go from there to there, you're looking at another 2 pips, so 7 pips, okay? So even from an aspect of I'm playing with potentially all of this move, okay? If this here was just to move down to this level here, the yellow line, which again, I do believe it's the weekly or the monthly, I'll have to have a look back. I think it's the weekly magnet area. If that was to come down to there, you've grabbed your 7 pips, okay? Let's take a look. So that's 5 pips from there to there. And then obviously you've got your first original entry, which was from here. So you've got just over 7 pips, you know. Now, again, in and you're out of the markets, you know. We'll just see if this is going to come down. See this, we'll do it live. And again, we're looking at a bigger picture. Yes, you've got all of this here, but we are breaking things down and looking at a method, a technique, and a way of how we can just get in and out of the market. Now, this area here, it's a stronghold, the yellow bits, okay? Simply because you've got your imbalance between here and this wick here. So if that's going to touch, I've literally 7 pips. I could be in and out of the market. Let's take a look. It's not always about getting the big moves. Excuse me. It's not always about getting the big moves. You see, sometimes you've just got to be able to do a top-down analysis and be able to break things down, but at the same time as breaking things down, be able to look at things on the fractal nature. And what I've been finding recently is obviously imbalance stuff, just how important these imbalance areas are. Again, we've gone right the way from the monthly, and now we're looking at this right the way down to a 2-minute chart, because I've got my color coordinates in it. I know that these yellow areas are not the weekly, they're the daily. I know these are the daily areas. These are important. I do know the dotted line is a previous day candle, whether it's going to be the open, the close, or the 50%. And I know the heavy blue areas is going to be obviously the high or the low of that previous day candle. We looked at the weekly, seen that the weekly was on a pullback, or the 4-hour was on a pullback. That 4-hour was on a pullback, coming back to the 50% area, and the weekly was on an area where it was going to be touching one of these magnets, these key colors. Again, would I have closed that out a little bit earlier? I possibly may have, but we're just going to see what comes out to touch the yellow line. To be fair, it might not do it now, but again, entry down to where it's at. There's around about 5 pips there anyway. And then your first entry, again, it's producing just over 2 pips. So I could have been in and out with 7 pips. And when you're entering on these areas, and again, I've got to stress this bit, okay? When you're entering at these areas, your stop loss is still going to be up here, okay? Your stop loss is still going to be on that higher side. But instead of going, yes, I want a 0.5 risk of lot on that entry area there, you're just saying, no, I'm going to factor in and I'm prepared that I'm going to be losing this, okay? So again, let this bit sink in. I'm going to be prepared that if I lose this, overall, I was going to risk a 0.5. So in this essence, I'm just going to do a 0.12. If it goes to this entry, I'll do another entry at 0.12. If it goes to here, I'll enter at 0.12. If it goes here, I'm enter at 0.12. So even if it came up to here, okay, and it pushed from here down to your entry, there's a 10 pip move there. Okay, it just means you're risking a 0.12 up to here from that area. And again, we've went and smashed through that. So today, if we put a trade on this, there's nearly six pips where it went to, okay, on the entry from there, but also from there, there's 3 pips. So there's 9 pips in, out within what, 5-10 minutes of me talking to you. Powerful stuff. Powerful stuff. I'm just going to stop the share for now. Let's have a look. Right, there we are. So hopefully you can see me. Again, this is more of a retail method sort of thing, but it's an advanced one. Okay. Watch back on the video. Look at how I've key color toned the areas. Okay, get used to it. Don't trade this style as such for yourself straight away. Just have a bit of practice with it, have a bit of fun. And this is always about looking at other methods, other styles, and other ways, you know, and seeing how these areas get respected. So I'm not going to ramble on any much longer. I think this video is full of good information. It's going to teach you how to stop using and scalping 1, 2, 5, 15 minutes and putting your areas of support and resistance on that. We're looking at the highest time frame, setting your key levels, because this is what this is. Yes, it's support and resistance still, but they're key levels which are turning points when you break it down fractally into the lower time frames. And that's the best way you can set these support and resistance on the floor, the ceiling areas. Okay, drop a comment in the advanced chat on in the Discord. Okay, let me know what you think. I've been having fun with this. It's a great way to trade. And again, I've done this in front of your eyes, showing you how you can factor in using risk to reward in a different way. Okay, using risk to reward in a different way. And I hope it's opened your eyes up to that, guys. Okay, so I'll see you later.